Hello and good evening to all of our viewers in Asia. I am Vidya, the head of Banana Race in Hong Kong, and I'm pleased to welcome all of you this evening to our webinar. Many investors in Asia are looking in various investment opportunities in the UK at the moment, and us at Banana Race would like to take this opportunity to share our insights and expert views on anything and everything related to property investment. This evening, we have our director from UK office, Mark von Grunder, who will provide you with the latest update on the London housing market, including data insights from our latest tenant survey. We are also pleased to invite our guest speaker, Damien Pollock from St. Williams, a renowned developer in the UK, who will share insights on the power of regeneration master plan in North London and why it is one of the hotspots, the best hotspots in London for owner-occupiers and investments alike. So I will be facilitating the Q&A session at the end of this webinar. So do not hesitate to key in your questions in the Q&A box on the panel below. So without further ado, may I please present Mark. Over to you, Mark.
Hi there, thank you very much, Widya. As Widya said, I'm Mark von Grunder. Most of you know me, or some of you know me. I'm a director of Benham & Reeves. I'm based in lovely London. We're all getting very excited now with the arrival of Wimbledon tennis next week. And that's where I really think the start of our British summer is. But as we all emerge from life in lockdown here in the UK, the property market continues to surprise us. It's hard to believe when you look back, the London house prices have actually climbed 6.5% since we went into our first lockdown a little over a year ago. They're up 6.5%. That's pretty amazing. And that's the first house price rise during a recession in modern history. You know, and in fact, while GDP fell by 10%, the total value of London property increased during the pandemic to £1.8 trillion, which is another first, with GDP and house prices diverging to such an extent. For me, it's a clear statement about the resilience of the UK housing market. The year 2021 got off to a great start as the average cost of a London home rose above £500,000 in January. You know, that's mainly down to buyers continuing to flock and buy properties to take advantage of the stamp duty holiday. The Halifax index showed that UK house prices in March, only a year on from the first national lockdown, were up 6.5%, like I said, which on average is over £15,000 in cash terms. Few could have predicted such a remarkable increase. According to Rightmove, the UK's biggest property portal, the average asking price of a home rose 2.1% in April, marking only the second time in the last 5 years that it rose so much in a single month. Almost a quarter of sales were for properties on the market less than a week. Interestingly, larger homes are being snapped up the quickest. Rightmove also reported the strongest spring sellers market in 10 years, an extraordinary surge in buyer activity prompting what many describe as a buying frenzy. All this has been happening while restrictions are still not totally lifted. Meanwhile, figures from the ONS, the Office for National Statistics, show that property values were 10.2% higher in March this year compared to March 2020. That's the fastest growth in 14 years. And according to Zoopla, another large portal, the UK housing market is on course for its busiest year ever since the global financial crisis. And more than 1.5 million homes are expected to change hands this year. That's a staggering 45% more than in 2020. Traditionally, the spring-summer season is always always the busiest time of the year in the UK. But the number of sales we agreed last month was up 12% on the last year, despite shortages of stock. And valuation requests received by our sales teams were up 14%. According to our own research, London's super prime property market saw transactions hit a pandemic high in quarter 2021. However, while there are signs of a super prime property market revival, you have to bear in mind prices are still down from their all-time highs, meaning the very top end still represents relatively good value for those looking to invest. The super rich bought more homes in London than any other city in the world last year. They're lured by the weakness of sterling and encouraged by the conclusion of Brexit. If you still remember what that was, it seems so long ago. Despite the travel restrictions and 3 lockdowns, buyers from around the world spent almost £4 billion on super prime. That's above £10 million in London properties. That's more than the total spent on super prime homes in any other city last year, with London overtaking New York and Hong Kong. That's confirming our status, or the UK status, and London's status itself as the world's leading wealth destination. Sales in Hong Kong, which had the highest number of $10 million plus sales in 2018 and 2019, they actually fell by 27%, while in New York, transactions fell by 48%. That's almost a half. I think the stimulus measures announced in the budget, including the extension of the stamp duty holiday and the government-backed 95% mortgages, have been really key in boosting confidence in the housing market. Meanwhile, historically low interest rates have supported buyers' affordability. You know, the hugely successful vaccine rollout, with almost 80% of people in the UK having now had their first dose. Who wouldn't want to be in the UK with figures like that? And our detailed roadmap out of lockdown have resulted in a renewed confidence, suggesting that housing market activity is likely to remain buoyant over the next 6 months. And savvy investors recognise that this is a real window of opportunity. Even if the market does slow down later in the year, a severe lack of stock is going to prevent a fall in prices. There are simply not enough properties to keep up with buyer demand. And for those who have continued working during the pandemic, they haven't been spending as much as they usually would. They can't go out, they can't spend their money. And the Bank of England now predicts that around £100 billion has been saved. This release of pent-up demand and desire for lifestyle improvement means people are now preparing for life after lockdown. And so after eating out and buying clothes, finding their perfect home is going to be a top priority. And with more money in the bank, that gives them more ammunition to go out and buy. Meanwhile, there's a growing feeling of optimism in the London rental market. Inquiry levels have continued to rise significantly over the last few weeks, with considerable pent-up demand from professionals who've endured over a year of restrictions, and now they're looking to return to some sense of normality. And with space at a premium, rents on larger homes are actually holding up better, while demand for smaller ones is more limited, as there are still so few students looking, especially overseas students, that was really heavily reduced last year. However, as London reopens for business, we really anticipate a full recovery of the lettings market, with rents returning to pre-pandemic levels. And we're already seeing tenants now who are looking to renew this year. They're agreeing to above inflation increases in rent. And in terms of numbers of lets, we've actually as a business seen 41% more lets so far in 2021 compared to the first 5 months of 2020. And with the return of international travel and the full opening of universities in the autumn, we expect to see a surge in demand from overseas students who usually have good budgets and they look for smaller properties, which we're confident will lead to a mini boom in the lettings market. You know, it's inevitable, however, that lockdowns have forced buyers and tenants to reassess their housing needs. You know, we'd run a survey of 3,000 tenants last year, and it threw up some quite fascinating insights. Proximity to green space is now more important than being near to a tube station. As people see a future of working more days from home, maybe not working fully from home, but there's a perception that they'll be working 1, 2, maybe 3 days a week from home. High-speed internet is a top priority for tenants now and at the top of their wish list. Demand is high for outside space, whether that's a patio, terrace or balcony. And we think these trends are going to feature for the long term and are really food for thought for investors. But let's not lose sight of what really matters. London has proved time after time that it's an extremely resilient city. London is an international hub for business. The city's strong economy, thriving business outlook and prosperous jobs market are among the main reasons people choose to buy, live and work here. London property is a bulletproof investment. You know, it's always been seen as the safe haven and for long considered one of the world's most trusted assets, with its ability to deliver a regular income and long-term capital growth, especially during times of wider uncertainty when people want to invest their money in a stable asset with low volatility. They turn to London. But it's important to target any investment, and when you're using your money, you want to target that investment very carefully. And apart from price and location, which are clearly very important, investors need to consider yields, as well as potential for capital growth, whether it's a regeneration area, and very importantly, the reputation and track record of the developer. And the key to a successful investment for me are 3 things. 1, meticulous planning. 2, on-the-ground knowledge. And 3, a trusted, independent partner that's going to hold your hand and help you. And frankly, this is where we come in as a business. And we've had now 60 years experience in the London property market. And today we have 18 branches, plus 8 more internationally, including 1 in Hong Kong where Whittier runs our office for us. And our focus is on our clients and ensuring we'll help with everything clients need by offering a complete one-stop service, which this slide shows quite clearly. You know, we start with investment advice of what to buy and where to buy and why to buy. We then look at handover and snagging, so you don't have to fly all the way to London to come and inspect your property. We'll do that for you and we'll go and make sure it's been finished properly. Then we'll arrange furnishings or refurbishment for you. We'll install everything for you. We'll arrange it and make sure it's looking absolutely perfect in order to let. And then of course we do the lettings for you, and that's credit referencing the tenant, collecting the rent and doing anything around looking after the lettings for you with all the legal paperwork. And then finally, we deal with the property management and maintenance. It's not like Hong Kong and parts of Asia where the letting agent finds you the tenant and then you're left with the tenant who contacts you if there are any issues. They contact us and we deal with anything for them. And then finally, we even do tax returns in-house, so we can, whether you have any tax to pay or not, as a non-resident, you still have to complete a UK tax return. So that's the end of my quick talk on the market. As Whittier said, we're going to answer questions at the end. So if you have any questions, please come through and ask. So I'm going to hand straight over to Damien Polak from St William, who will talk about a really exciting opportunity in the heart of North London. You know, North London is a real rental hotspot now, And there's very strong demand from tenants, whether that's professionals, students, or young families, looking to live in a vibrant neighborhood with good proximity to schools, as well as developments that have on-site amenities. People want on-site lifestyle amenities and, of course, outside space, and most importantly, has good transport links. So now I'm going to hand over to Damien, and as I said, I'll come back at the end and answer any questions. Damien, over to you. Thank you.
Thank you, Mark. Hello, everyone. My name is Damien Pollack. I am the Project Sales Manager here at Clarendon. And today I will be giving you an overview of the Berkeley effect of the regeneration, and specifically focusing on the Clarendon development, where I am actually today based, and the Alexandra Palace Garden, which is our newest and actively being sold phase within the development. Quick background on me: I've been with Clarendon since the beginning. So we launched in late 2018. So I have been here for about 2.5 years and saw the project developing over time. So going down to the next slide, please. So where is Clarendon? So we are located in North London, Zone 3 to be specific. The borough that we are located in is Haringey, and the area is Hornsey. The Haringey borough is one of the greenest in London, which Mark mentioned is very important now for potential tenants or even investors to look into buying properties nearby. We have great links to the City of London, as you can see, and also to the rest of the UK to the north. To be specific and more focused on the actual location, so we're perfectly placed in the middle or the heart of Haringey. You can see the Clarendon outline in yellow. To the left, so that's the west side, we have very affluent and developed areas of Alexandra Palace, the park itself as well. That's over 200 acres of green space on the raised ground, where you can see the whole of London. Alexandra Palace itself as well is a very historic landmark, where BBC did the first broadcasting in the UK, and now it's being used as a venue for different events, and there's marketplaces as well. Moving on to Muswell Hill and Crouch End, those are very established small villages within London. This is where you can find all these independent shops, restaurants that investors and tenants are looking for as well. Clarendon itself, as I said, is in the heart of the borough, meaning that we benefit from the developed areas of Muswell Hill, Crouch End and Alexandra Palace, but also are contributing to the regeneration of the right-hand side of the borough, which is the east side. So looking at Wood Green all the way to Tottenham, the borough has planned to invest approximately 3.5 billion and deliver over 7,500 new homes over the next 10 to 15 years. The Wood Green station and Turnpike Lane stations are both located within a walking distance. They are on Piccadilly line, and we also have 2 National Rail stations, Alexandra Palace and Hornsey, within, again, 10-minute walk. I will explain where the locations that you can get to from these stations are, but to focus on the Wood Green itself, we have a very good high street. That's part of the regeneration. So you have all those independent or more high street shops here that your tenant or potentially yourself, if you're living here, can use in the meantime as we regenerate the area. What's quite special about Clarendon, where we are located, as I mentioned, we are in the middle of, or sort of the gap where we fill in is the connection between the more regenerated area of the west of the Haringey with the east of Wood Green. The connections, as I mentioned, so we have 2 underground stations, which are the Wood Green and Turnpike Lane, both on Piccadilly line. These are great to go to employment hubs such as King's Cross. Also, you can get the Eurostar from there to Paris once the restrictions are lifted as well. This line covers all of the main touristy spots, so Covent Garden, Leicester Square, as well as it goes all the way to Heathrow if you're planning to go on a trip. The connection with Piccadilly line is great for higher education as well. The closest university, I would say, would be Central St Martin's in King's Cross and UCL in Euston. However, if you go further down the Piccadilly line, you have access to King's College London and further higher education as well. The rail itself is very useful. So the two stations that we have here are Alexandra Palace and Hornsey. These are great stations to get to, for example, City of London, where you have the main financial hub of London. The train approximately takes just under 20 minutes, and it also stops at Old Street and Highbury Islington, where you can grab other connections as well. Not to talk all about the connections, however, we do have a proposed Crossrail 2 to come through one of the key stations within near Clarendon. Crossrail 2 will connect the Surrey to Hertfordshire, going through central London. So that, you know, it's very rare that we have within their regeneration already 4 stations, but we're going to have a 5th one potentially coming at the end of 2030. That will again have a great impact on the property value within the borough. So a quick overview of the actual Clarendon regeneration and what we are planning here. So Clarendon is located on a 12-acre site, which has been in the past a gas holder. So St William are working closely with National Grid as a joint venture to redevelop and reconnect brownfield sites. 100% of our sites are brownfield, so we are focused on regenerating those all around London, specifically in North London, where Clarendon is located at the moment. The development of the regeneration wall is a £500 million regeneration, which will deliver 1,715 new homes over 5 planned phases. The development itself is a mixed-use development, so we also will have 100,000 square foot of commercial space. Those will be also leisure facilities that I will mention later, and also the landscaping that we will provide for our residents and the public as well. The whole idea of the regeneration for St William is a landscape-led development that will reconnect a land that hasn't been used for many years with the local community as well. As you can see here, so Clarendon is one of the bigger developments. It is the flagship development for St William, North London. It was one of the larger ones that we started, and you can see it all in green, sorry, the blue here. The area itself, as I mentioned, Harrogate is having a really big regeneration. Over 7,500 homes will be delivered. And we are just at the beginning of the regeneration. So the values are probably the lowest they will be, and we are hoping to for those to increase as well, as I will later talk about the previous sort of case studies that we have within the area of a Berkeley regeneration and the effect that we have on the capital appreciation. So in the immediate area, we have developments of sort of 100 to 200 residential apartments, the Chocolate Factory, Caxton Road, High Road, and Iceland. So these are sort of the immediate within the Wood Green area. The Harrogate Borough is quite large, and that extends to sort of Tottenham Hill, which you can see at the top of the left corner. So Tottenham Hill itself is a big regeneration that will deliver over 5,000 homes as well. So as you can see, a lot of investment is being pushed into the area as part of Berkeley as well. This is our 3rd development in the area itself as well. So there are 5 focus areas that we always have for our regeneration projects. As Mark mentioned, our focus is really on our reputation and working with clients. All of the decisions are very client-based. We will make sure that you are informed. I know a lot of you are overseas, and most of you are overseas, so you will be able to have the support here in London from our sales team. Throughout the process, we will be able to work closely as we are with Benham & Reeve to help you with the reservation, completion exchange, and also if you're looking to rent it, to do that as well. As Mark mentioned as well, a lot of demands or needs are changing for clients who are looking to rent the property or even buy the property. So we are making sure that we are keeping up with the trends. We do provide, all of our properties have private outside space, as well as the 5 acres of landscape gardens that residents will be able to enjoy. The internet is very fast, so hyper optic is present on site. So clients who are working from home, that will definitely then benefit them. We also make sure that the development of the project and the property is delivered to the highest standard, as well as lowering our environmental impact. So great places. So as I said, our developments are very landscape led. We always look at the landscaping first, how we can increase the biodiversity with green roofs, landscaping and courtyards as well. So we are not creating just a place to sort of sleep. We want clients and people, residents who live here, to enjoy and use the facilities that will be on site, and I will mention later. We are focusing on our environmental impact, as I mentioned before, and that's not only environmental, but also the local community impact. We do try to get everyone involved as much as we can. So we're using local suppliers for our hoarding, the landscaping as well. And also we do understand that buying a regeneration project, you will be potentially have some work going on for a couple of years. So we do make sure that we make it as comfortable as possible for you to live here as we grow the development itself. Commitment to people. So we do, again, focus a lot on having a positive impact on the society. So with our Berkeley Foundation, we do try to help unemployed people to get back into work with our developments and regeneration. So wherever we go and we see opportunities to regenerate an area, we do want to help the local community as well. So talking about previous sort of effects or regeneration effect that Berkeley has in the area or around London. So Woodbury Down is a great example. This development is based just one stop towards south from Clarendon. So this is in Manor House. We launched this development around 2009, which has been also a big regeneration site. So what these slides will show you here is since the 2009, so the launch, the area itself, so Hackney, where Woodbury Down is located, has been growing greatly. However, the Berkeley products of Woodbury Down itself has outperformed most of the area by 62% in terms of value growth for pound per square foot. So we started at around £400 per square foot in 2009, and currently is sitting at around £1,000 per square foot, whereas the average for the area is just over £700 per square foot. Also, a very interesting thing to notice is the price growth. So I did an example for a 1-bedroom property that will show you the sort of price growth from when they launched to when we are currently, so last year. So please remove one of the zeros. So it started in 2012 at 275,000, not million. And now in 2020, it increased by 50%. So this shows a great sort of opportunity to get in and buy early in the regeneration areas. As you can see, these are statistics that we have collected from previous developments, and they are doing really well. Another great example of a regeneration is the Royal Arsenal Riverside. So this development, we are still building and regenerating in Woolwich, so that's East London. Again, the area has itself grown, however, properties within the development have increased by more than 35% over the area performance as well. Here again, the increase of the 1-bedroom properties in 2012, there were £233,000, and now they are selling currently at around £483,000, which is a 52% increase in the value itself. And the last one we have is Skipbrook Village, again a big regeneration site in South London. The development itself is performing 45% over the market performance, and the one bedrooms have increased by 46% since 2012. So you can see we sort of wherever we go and we have a regeneration, it doesn't really depend on which location we are. The regeneration and Berkeley effect has and is present in all around London. So the first development I mentioned, Woodbury Down, it was in North London, Royal Arsenal is in East London, and the Kidbrooke Village is in South London. So wherever you come and buy, you will benefit and grow with us in terms of the capital appreciation as well. Another great thing, so a lot of our developments and especially regeneration sites are sold off plan. As Mark mentioned, you should focus on a reputable developer that will deliver what they promise. Berkeley, we are great at this, one of the top runners in terms of the industry for delivering the product that we promise in the CGIs. For example, the top row, you can see the CGIs when we first started promoting the development, and at the bottom you can see what we actually delivered. So the first picture would be the CGI of our concierge here at Clarendon. You can see we have delivered the concierge sort of early this year, and it looks more or less very similar to the CGI. Similar in the Prince of Wales Drive and our Clarendon kitchens, one of the show homes. We do deliver what we promise, so you can have that peace of mind when you're buying with us, even if it's more than sort of 2 years off plan. The current progress of Clarendon actually. So we have completed, I'm currently sitting in the block, which is the first phase, it's Hornsey Park Place. So we have completed this block, started sort of February of this year, and we have successful completions and 99% sold rate here as well. We've also, part of the first phase was the main park, which was a 1 acre Hornsey Park, which connects sort of the east side of the development with the middle, which is Hornsey Park Place. We also allowed the local community to already start enjoying the park and a playground as well. And the second phase is currently strongly underway. So we have, I will explain later the blocks itself, but you can see how quickly it's actually developing over the last 2.5 years. So the construction itself was a 10-year project. However, we have already delivered the first phase, and the second phase will be starting to complete early next year, all the way to 2023. So I wanted to summarize why a lot of our clients are choosing to call Clarendon a home or an investment as well. So as I mentioned, great links to 4 key stations, which is very rare for a regeneration site. We do have already existing 4 stations, so 2 on the underground Piccadilly line and 2 on the National Rail, which get you straight to City, King's Cross, great employment hubs with Google, YouTube, Facebook having the headquarters there. Great location in terms of the green space. As I said, Haringey, the borough that we are in, is one of the greenest in London. We are only 10 minutes walk away from Alexandra Palace itself, which again, as I said, is just under 200 acres of green space. There's lakes, rowing lakes, there's golf courses as well, and local markets. So there's an abundance of green space around the development, as well as we will deliver 5 acres of landscape gardens on the actual site itself. We have been receiving very strong rental yields, so 4 to 4.5 rental yields currently at the first phase. We have rented properties with help of Benjamin Reeves as well prior to completion even. So you can have the assurance that once you complete, you can start generating the rental yield as well. With regeneration sites, what you would also benefit, as I mentioned before, is the estimated growth in capital. So Clarendon itself is predicted to grow about 15% in the next 5 years as well. So you will benefit from buying early in the development. Berkeley, we are top-rated developers for providing our fantastic residence facilities, which I will talk through as well. Those will be on-site. Currently, you have concierge that's already operating, and if you are buying in the second phase, you will have the gym and the rest of the facilities throughout the third, fourth, and fifth phase. We will also add, as I said, is a mixed-use development. Therefore, we will have a lot of retail space. We have a lot of commercial space with offices, restaurants, bars on site itself. That will come in the upcoming years. However, already the Haringey or the Wood Green Hornsey area already has a lot to offer in terms of high street shops and also independent shops. So you can walk to those areas whilst we develop our Clarendon development and the on-site facilities as well. The park that I mentioned is already functioning and our residents are already enjoying it. And also the development is, as I said, we are placemaking. So we are creating the lifestyle and offering everything they would need within this sort of small village that we call within North London itself. So these are our facilities. So we will have a park club coming in our phase 3, which will have the residence lounge. So working from home, again, we looked at what sort of needs that our clients have now, and it was sort of having the space, having the ability to work from home with high-speed internet. So we will provide residence lounge as well, where there will be a private meeting or even a dining room as well. You will have an on-site gym with a 60-meter swimming pool, sauna, steam room, and also treatment room. As I said, the concierge is already operating 24 hours as well. So phase 2, so just to show you on the site plan. So our phase 1, which is where I'm located today, and I showed you pictures of it being completed, is outlined in the green. It's number 1. So that's where your concierge is, and you can see also the park running through to the bottom of the site plan. To the left, we have 3 blocks which compose our Alexandra Palace Gardens phase, which is the second phase of the development that's currently being sold. So the 3 blocks are Alberta Mansions, which has the earliest completion date of August 2021, so end of this year, and prices are starting for 552,000. So here we only have 3 apartments left, so they are 1 3-bedroom and 2 1-bedroom properties. If you're looking for something slightly further off plan, you can look into Lambert and Beeley. So Lambert is due to complete estimating February 22 to September of 2022. Here you have slightly more choice in terms of the apartment type. So we have sold all the Manhattan suites, which were the studio apartments. However, we still have 1, 2, and 3-bedroom apartments available, starting from 473,000. And Beeley mentioned that this is our latest launch within the development. So this is where we will have a creche or nursery on site as well. And we have the sort of cheapest starting prices at 460,000 for a 1-bedroom property, but we also have 2-bedroom and 3-bedroom duplex apartments available with completions of Q1 to Q2 of 2023. So sort of focusing on the sort of details about the development itself. So the tenure is a leasehold of 999 years, which is technically a virtual freehold, what we call. Parking is available for 2- and 3-bedroom properties at an extra cost of 25,000 and an annual service charge of £300 per annum. Service charge itself is £4.29 per square foot. Plus we have a CHP system, so combined heat and power system that will be on site. So that would again works with our environmental impact to reduce it, should I say, to the system. We'll be providing the electricity and water to the actual development. Ground rent, as you can see as well, starting at £320 to £550 per annum. And in terms of if you were interested in reserving a home at Clarendon, the reservation fee is £2,500 and the payment plan differs depending on completion. So for Lambert and Alberta Mansion, we have 10% on exchange, followed by 5% advance payment 6 months after the exchange, with 85% being paid upon completion. Beeley, the only difference is due to the completions being slightly later, there is additional 10%. So it would be 10% on exchange, 10% 12 months after the exchange, further 5% after 18 months the exchange, and then balance of 75 upon completion. So it's quite straightforward. If you have any questions, then we are here, Ben and Marie are here as well in terms of purchasing property. We can answer any questions in the Q&A as well. We are working on producing a great document that will focus on the details of the regeneration at Clarendon as well. So we will be able to distribute it to those who need it. But I will give it back to Widya for any Q&As that we can help with.
Thank you, Damien, and of course, thank you, Mark, for the market update. I am a fan of regeneration, not just for what I propose and recommend to my buyers, but also for myself as well as an investor. It is a proven track record when you invest in phase one, and I myself can endorse that, vouch for that, as I've also invested in a Barclays scheme in North London, even during the pandemic. When my previous tenant had to leave, within 2 weeks, I got a replacement tenant. So that's good news for anyone considering to invest in North London. So let's begin with the Q&A session. I have seen a couple of questions coming in with regards to the rental. The first one, this is to the attention of Mark. You've mentioned that you have 20% growth in let inquiries after lockdown. This gentleman would like to know how many successful rate comes from these inquiries, Mark.
What do you mean, what's the successful rate? Do we mean by that the successful number of lets, or we need
yes,
the rent?
I believe that is the question that has been forward.
So let me take it two ways, just in case it's rent. So what we've seen is rents have, obviously during the pandemic, we were still doing lets. We were open for business. We were one of the few businesses that were open, and the market was challenging. There were no students, so that removed a lot of people from the market, normal tenants. Secondly, there was a reduction, there was an increase in stock available, a massive increase in stock, because there was no international travel. So all of the people that let their apartments on Airbnb had to let those on long term, and that included me. We have our own properties, which I was getting it on the short term market. I had to put it in the long term market, but we let it. But the rent was significantly reduced. And what we've seen over the last in 2020 were rents were under pressure. I'm not painting a rosy picture that the market has been flying. Stuff will rent as long as you price it correctly. But this has been, where I'm talking, the market has been incredibly busy this year. We're up 41% on terms of the number of lets we're achieving, and rents are now slightly starting to move up. So increase in terms of leads, yes, we have had 20%, just over 20% more inquiries in the first 5 months of the year, but we're up 41% in the terms of the number of lets we did compared to last year. But if you go back to 2019, which I think is fairer because the market, everything was normal, we didn't even know about COVID then, and we're still up 22%. We did 22% more lets in the first 5 months of this year than we did compared with 2019. Now, 2019 was a very good year for us in the rental business, but that just shows there's such strong demand. And as I said in my little talk at the beginning, it's when the travel opens and when we get fully out of lockdown, fingers crossed, in the middle of July, and travel starts, and universities are already announcing. I was on a call 2 weeks ago with Russell Group universities, and Oxford and Cambridge were there as well. All of them are declaring they're going to be fully open for students coming. There'll be no studying from home, except if you're really in trouble in your country and you can't get here. So we are predicting, and I've said that in my talk, a large number of students going to arrive and going to need accommodation. So this is going to be late this year, because normally it's May, June when we're busy, but we're predicting it's going to come in. So I think there's going to be a mini boom in the rentals market. I'm not suggesting rents are going to be double before any of our clients start contacting me and say, fantastic, can I double my rent? No, I'm not saying that. But you will, we are incredibly short on stock because of what we're letting. And our last factor I'll say, just because it's interesting because you're in Hong Kong, is is B&O visa holders. We've had such a massive increase in B&O visa holders. Last week alone, we did 14 lets to B&O visa holders, 6 in one day. And these are going to continue. These people are coming here from Hong Kong and they're renting. They're not buying so much now, which is advice we've been giving. They're renting to get used to an area. So again, that's another tenant group who are looking and going to rent. So yeah, the market is busy. We're just short on stock.
Thank you, Mark. Yeah, sitting in Hong Kong myself, I'm actually filtering through all these inquiries. So that is a sentiment for the market there. And to kind of like bring it back to Clarendon, actually, I was just checking with our North London office in terms of the conversion of our inventory at Clarendon for the phase 1 property that just recently completed. We pretty much converted almost 70% of our lettings listing in this development within 2 to 3 weeks. So it's again
the quickest let we did in Clarendon was 2 days. The client instructed us on the Tuesday and we moved a tenant in and it was all agreed on the Thursday. So Clarendon is incredibly popular. It's one of those areas. Yes, it's regeneration, so that's good for capital growth, but it's incredibly popular by younger people because it's closeness to the stations, it's near Alexandra Palace, and the facilities are really good. So it's even though it's a construction site, even though there's building going on, there's not a lot around in this area which tenants are able, these kind of regeneration schemes, brand new product. There's very little in the area around Clarendon. That's why it's so popular.
Yeah. So there's a question on the buyers of Clarendon. There's a question on who are the buyers here. And I guess I will also link it to the second question by a different viewer. What is the difference of investment potential between a studio, 1 bed, 2 bed, and 3 bed? Perhaps, Damien, you would like to take on that question?
Yes, thank you, Lydia. So in terms of the buyer profile here, when we first launched, it was a lot of great investors looking to buy here because it was off-plan purchase. The completions when we first launched was about 2 years off-plan. However, as we came closer to the completions as well, we had a lot of local buyers purchasing here through the Help to Buy scheme as well. So we were able to catch both of the different demographics. So there's investors who are looking to buy early to benefit from the lowest prices that probably will be and benefiting from and growing with the development, and also providing opportunity for first-time buyers to come here. So that creates, again, goes back to our idea of creating a community here. So you will have sort of a great mixture of different residents here. A lot of sort of the age group, I would say, anywhere from 25 all the way to 40. We had quite a few downsizers looking at 3-bedroom properties. The area surrounding Clarendon is very residential in terms of houses. There isn't many apartments, especially new build apartments. So a lot of clients who are getting slightly older, they are selling their houses and are looking for those 3-bedroom apartments that are easier to maintain due to service charge and the managing agent on site as well. But you do have a lot of, due to the connection to central London, especially the city, you have a lot of city workers that are purchasing here or renting here, as well as the sort of more of the tech hub from King's Cross. A lot of employers are looking to rent here or even buy here because there's only 15-minute train ride away. So, we have a really good diverse resident here who are renting or buying as well. It sort of changes throughout the development. Now we are more developed, so the first phase and the park is open, so it definitely attracts more residential sort of local buyers as well. And the future phases, like I mentioned, the second phase, it's about, some of them are 6 months of plan, some of the properties are 2 years of plan. So again, you have the opportunity to buy early, again, for investors' points of view as well. In terms of the rental, so as I said, we have sold out all of our Manhattan suites. They tend to go the quickest. their prices start at about 350,000, and you can probably achieve about 4 to 4.5 rental yield on these. Very nicely, because we have sliding doors, you can have a sort of couple living there or even a single person. So you're sort of catching those two categories of potential tenants. 2 bedrooms have been very popular as well. 2 bedroom actually compose most of our apartment mix here. These are great for, especially last year when the pandemic started, a lot of people are looking to have that second bedroom as an office. So we are seeing a large increase in demand for 2 bedroom properties. 3 bedrooms, as I mentioned, it's sort of local buyers, downsizers who don't have many options of 3 bedroom new build apartments in the area. So this is very popular here as well. And 1 bedrooms have always been performing really well because of this sort of starting price at the moment 460,000, and you are able to rent it out quite quickly again to either a couple, a student as well, or any other sort of a mix of tenants.
Okay, great, thanks. You mentioned service charge, and you also shared the service charge and ground rents at your presentation earlier. There is a question with regards to that, because someone is asking whether you would be increasing these charges in the near future.
Great question. We do tend to get those questions, especially on new regeneration sites, because there isn't any precedent to look at. What I would say is we look at the current service charges, £4 sort of 58 with the CHP involved for the second phase. That sort of includes the current facilities. So it will be 24-hour concierge, temporary gym as well, the landscaping, building insurance. So that we look at how the cost compared to a number of residents. So even though in the sort of third phase we'll be launching the majority of the facilities, third phase will actually increase the number of residents by almost half as well. So we are hoping that in the future, even though the cost is going up because we are releasing those facilities, then the fact that the number of residents goes up as well, we are able to sort of divide that cost by more residents, therefore sort of keeping it at a level where it is now. What I would say, they are estimated, so we will review those. We cannot promise whether they will go up or down, but what I can say is you are buying with Berkeley, St. William. So we are, we have a reputation to uphold, so we wouldn't change that just to increase the service charge, like some maybe potential smaller and less reputable developers are doing.
Mm-hmm. Great. There's a few questions on the development itself. There's one on the potential business, because you have mentioned that there will be over 100,000 square feet of business commercial space. Do you have any potential business that is already set on site? Mm-hmm. And when will they start their business operations?
Okay, so the majority of the commercial space will be from phase 3 to phase 5. The reason being is we have to have enough residents to attract really good businesses on site. So we sort of decided to keep it to the later or mid phases. In the first phase, we have 2 commercial spaces, which we are looking to rent to potential, even Benham and Reeve, if you do want to come here.
Yeah, we're looking at an office. Hopefully we'll open in phase 1 next to the concierge. We're just looking at it now.
Exactly, so we might have a Benham and Reeve on site, which will make your process even easier to rent the property and maybe sell it in the future. We're also looking to open up a coffee shop or a cafe just to begin with. With phase 3, which we'll be launching later this year, we are looking to open a supermarket. So we are in talks with Co-op at the moment. And also that's where we'll sort of start working with the local, there's a brewery we're working on, we're trying to bring on site. They're already here in our sort of further land up the actual site. So we're trying to get as many local businesses on site as well. We might even open our St. William, North London office here, and also more retail and the sort of create a cultural quarter in phase 4 and 5. So it's going to be a really nice big square with all the shops, restaurants at your footstep, sort of doorstep as well. What's great about this area, it's even though the commercial spaces that we're focusing on are in the future phases, you already have great high street. About 2-minute walk away, there's a big shopping mall that's part of the regeneration as well as you have the Muswell Hill and Crouch End, where you can get the more local businesses. So hopefully that answers the question.
Great, thank you for sharing. I believe that in this development, there's also some owner-occupiers as well. And there's a gentleman who's asking about the safety of Clarendon, especially when it's close to Tottenham Hill.
So even though we're in the same borough, you wouldn't be able to walk from here to Tottenham. So we are not that close. We, as I showed you in the beginning, Clarendon is nicely sort of placed in the middle of the borough. So we have these very affluent areas of Crouch End, Alexandra Palace and Muswell Hill, which are all residential. Clarendon itself as well, we have 24-hour concierge here, which act as extra security. The walk to the station is very close, as well as the high street. Me and my colleagues, we've been using the public transport, and a lot of our buyers who are actually completed now and living here, are all using, walking to the tube station, whether it's winter or summer, and there's no sort of concern about safety at the moment. So, it's a slightly different area than Tottenham Hill, even though it's the same borough.
Right, we have reached the hour, so I'm gonna ask 2 more questions. And this next question actually comes up many times when we discuss with our clients, right? How has the cladding crisis affect property sales and rentals? Perhaps, Damien, you would like to take it on?
Sorry, could you just repeat the question?
How has the cladding crisis affect property sales and rentals? That's a question that's a pre-webinar question that has come through from one of our viewers.
Yeah, so cladding, it's been a big sort of topic last year. When we actually were looking to have our first completions at Clarendon. So we were able to, make sure that there's limited cladding or non-cladding at Clarendon, and also provide the EWS1 forms, which basically, state that the material that we use is in line with all the fire regulations as well. Banks are very strict on these regulations, and we were successfully able to complete on all of our properties in the first phase. So there was no real issue there at all at Clarendon.
Good to note. Okay, finally, there's a few questions actually asking about mortgage facility. International buyers are actually spot for choice in terms of lenders. In Hong Kong, you have HSBC, you have BA, and also other UK mortgage brokers who are based here that can assist you with your finance inquiries. In fact, we actually have a one-to-one private consultation next week at the Barclay Group office for Clarendon, and we will have a mortgage broker with us for those 2 days. So anyone who would like to have a clear assessment or a discussion on financing, do reach out to us and make that appointment. So if you see the QR code right in front, you can scan and register for your private consultation to meet us in person next week. So I guess with that, I'd like to thank our speakers for their insightful sharing. And we will follow up with each and every one of you to discuss further. So thank you so much for joining us this evening.
Thank you. Thank you very much.
Thank you, everyone.